All right. Good morning, everybody. Welcome to this week's Marketcast call. As usual, just want to check in, make sure everyone can hear me before we get going. Awesome, awesome. Good morning. Give everybody another minute or two to get on board here. Hope everybody had a great weekend. Good morning. McLovin. Yeah, a little drippy here. Yeah. Here's a little stock setup, by the way, when I was working on over the weekend. Little ExxonMobil. It's like cruising for a bruising and break through 120 would likely mean new highs are coming. Feel free to throw that on the watch list. Gotta make sure I put it on ours. For now, let's just throw it all the way down here. Okay. Keep an eye on that, good. All righty. Let's go ahead and get to it. Came into last week, as everybody knows, we were expecting higher prices for the market, and the market did not disappoint. I believe the S&P finished up about 4%. And we kind of got confirmation midweek. We were actually eyeballing the NASDAQ futures here, which interesting when you look at where they're noticing this morning. Look at that. So a little explanation as to why we are kind of stalling where we are. And then retests, and then now again. So we've been able to get some pretty good cues from the NQ here. And let's look a little closer. I'll show you what we were looking at. I think it was like Tuesday or Wednesday. Kind of came in the week a little cautious, but thinking upside. And then this guy kind of developed for us here. And let's see, let's trim this down here a little bit. I'll leave this one just in case. So you can see pretty good trend line here. Tested 1, 2, 3, 4, 5 times. And then we had this. At the time, we were curious: are we staring at a bearish wedge here? Bear flag wedge-ish formation. Bottom line is, again, I think it was Wednesday of last week, maybe Tuesday. Actually, it was Tuesday. Pushed right up on through, and that was a pretty good cue for us that we were likely heading even higher. Right, so it's pretty straightforward. Um, Somehow we managed to not find as much success as we would have liked in our trading, but we got the market right. So now we are going to watch panning back out here. We're going to keep an eye on that breakdown level there. Wouldn't be surprised to see us pull back from it, but off this low, what do we got? About 9-10% off that low. It's been a pretty good run up from it. Keeping in mind that the NASDAQ did move into correction territory. I don't know if they may even mention that. I don't know if I've heard anybody actually mention that. But I also haven't been on a lot of social media and stuff over the past week or two. But so yeah, pretty good setup here for us. If we pulled back, could be maybe possibly finishing up a pretty good head and shoulders. So we'll watch for that. Right? Maybe pulling back to the old 19K. You can kind of see in this area. If that happens, we'll watch. Otherwise, it's the push of the year, call it 19.7, and that should, I would think, put the finishing touches on any, maybe doubt's not the right word, but I do think it's, as of right now, I wouldn't fault anybody for being somewhat skeptical whether or not the sell-off is over. On the flip side, no reason to believe that it possibly isn't. We looked at the weeklies, I think, last week. Pretty good case to be made there. But I think if you take this out, I think that should put the finishing touches on, yeah, the sell-off's over. Good news for us, at least in the services I operate and stuff, they're shorter term. So we don't necessarily need to get that right. Obviously, we want to be on the right side of the market on all scales, all time scales. But at the end of the day, most of our trading is from the Tuesday to Friday stretch. So as long as we get that right, level to level, rung or to rung, that'll be good enough for us. So take this out. Bottom line is we'd be expecting higher prices in the days afterward. So yeah, keep an eye on that. Right. So if it happens on a Tuesday, happens on a Wednesday, see this boop, that'll be your cue. And then speaking of rung after rung after run at S&P, right? We're kind of breaking these rungs on the way down, right? So this is where we ended up on the Friday before, which is why we were leaning more towards higher. Here was that same Tuesday, taking back 5,400, right? I don't know that this level here, it was something back here. I don't know that it still is. I'm going to keep it there for now. But once it took that out, and then 5,500, right? So the S&P kind of, didn't leave much doubt most of the time. But again, I think you kind of look around and see which index, which gauge kind of points us in a direction. So I'll get asked, well, which one do you watch? Like, well, I kind of keep an eye on, S&P, NASDAQ, I think are the main two that most watch, but it doesn't hurt to know what the Russell's doing. It doesn't hurt to know what the NYSE is doing, even the Dow, And for me, I just kind of look around to see who can give me the best read on what I might, be able to expect, right? So Dow coming down here, right back down to the bottom of this little trend line, getting a little bit of a bounce. taking out 40,000 kind of seems as if, you know, the Dow's plan on running the new highs. Is what I mean. That's what I think we would all think. NYC is knocking on the door. That might actually be a new closing. It's close. Let's see. I just missed it. Just missed it. So one more higher close, right? Be like it never happened. So I think right now, again, we're taking out wrong after wrong. Um, Still bull market intact, right? And the path behind us for the previous 10 days is mostly pretty much up. I think you err on that and you trade accordingly. Keep it simple, stupid, right? Don't overcomplicate it. I can kind of take this right in this area, maybe. Let's keep an eye on the NYC. So pretty straightforward stuff. But just remember, you run up as fast and as quick and everything as we did from that low. You're looking at 8, 9, 10% run ups in 2 weeks. Uh, Remember, there's always pullbacks. We don't go straight up every day, all the time, forever. So, would I be getting long here today? Probably not. I don't know that I see too many reasons to do something like that. Again, if nothing else, just kind of testing these highs. You just saw the NQ and what that looks like. I'd want to at least see these taken out, right? And once those are taken out, then maybe all right, load back up with some longs because apparently up and away we go. So that is that seasonality. Let's kind of pull. We haven't looked at that in a while. Although I have a real tough time getting these things to come up. Let's see if I can do that. There's our. Let's pull this one up. At least we'll try. We will try to see if we can get this up here. All right. Last time I tried to do this, it didn't work out as well as I would have liked. All right, so let's see. All right, everybody see that? See if I got that one right. Little seasonality. Should be seeing 4 different. Let me know if you don't see it. You do? All right, cool. Everybody else see it or just Charles? I assume if Charles sees it, everybody else does. All right, good deal. So, certainly not the end and be all, but kind of gives you somewhat of a roadmap of what commonly happens when the market does what it normally does or should do or has done. Use whatever phrase you'd like there. And normally, August is a decent little month. I don't even know which one of these you could even use, considering some of the recent changes. But because I guess technically the sitting president isn't running, otherwise we'd be looking at the green. But if we just focus on the black right there, the just simply all election years, more often than not, September is not a thrill. October, and then you tend to see a rally into the election there. So we'll see. For what it's worth, I don't get too much myself into seasonality and such. It is neat, when you see the market do what it does. I think probably many of you, if not most of you, all of you, kind of see how well the market tends to perform in that November, December stretch going into the beginning of the year a lot of times. Um, so definitely, I think we've all seen that's kind of the norm and so forth and so on. This year, we were expecting some weakness in the February to March, and it never happened. So take it for what it's worth. You know, um, Historically. So there's that. Okay, let's come on back. Mm-hmm. I think I'm getting better at this. Maybe. Oh my gosh, I just lost my screen. All right, we got that back up there. right, so, anyway, so that's what I'd be watching. I wouldn't be, out here running and buying puts or anything like that. But again, pretty good run up. Certainly nothing wrong with waiting to see either one for a pullback of some magnitude or a break through these pertinent levels. And as I said, probably the main one I'd be keep an eye on is back over here. So call it 19.7. So any market questions there? Pretty straightforward stuff. Pretty straightforward. Let's take a look at gold is doing its thing, taking off. Should look good on Friday and pulling back a little bit here today, but I expect higher. If you think back way when we broke through here, if I remember correctly, what was our target here? Let's pan out a little. Yeah, our target was 2,500 when we took out this shelf up top. So we have exceeded that. That's 2,500 at minimum, by the way. So we've made it there, and it sure doesn't look like there's any real signs of slowing down, although starting to see a little bit of a momentum problem, right? So we're hitting these highs, but so we'll see if that pans itself out. But I would think we try to make another run up there before possibly taking some hits. All right, let's take a look at some of our buddies. Obviously, let's go back to what was on my screen before. Really nice setup here with ExxonMobil. So trades are pretty straightforward. Break above and hold 120. You're looking for some bullish plays. Probably expecting new highs. Not probably, I would. I'd be expecting it to hit new highs. Could look at a pull down to the trend line if that happens. The green. Look, maybe go long there. A break of the trend line. Maybe look at some a bearish play. So I can start with that. And then who else were we watching? I know last week we were watching Weatherford. Weatherford, pretty good breakdown at 110. If we can regain it, right? So tale of two different oil plays. Weatherford looks like it plans on hitting resistance rolling over, as where Exxon, granted, they don't do the exact same thing, but looks completely different. What were we watching? Oh, keeping an eye on PDD to start the week. Getting back up to this key 150 mark. Couldn't quite take it back. If you look in the pre-market, it's going to try again. So I think if PDD can hold this 150 this time, then I think no different than back here, no different than back here. PDD is pretty straightforward, right? If we could hold 130, should open the door to 140. If we can hold 140, should open the door to 150. If we can hold 150, should open the door to the 160. Right, so PDD is on our radar. Exxon is on our radar as well. Let's see. Meta, we are keeping an eye on. You see this 540 seems to be the breakout point. So if market pushes higher, Meta can take out that 540. Not only is it a new high, keeping in mind just hitting a new high by itself isn't, quote, a breakout. Like every clown on the street wants to say, okay, if that was the case, right, there's any number of highs that didn't work out, right? So you want to see like a real level being broken as you hit the new high is what you want to see, right? And this 540, now that we've tested it again, now we're seeing, okay, we can take this out, then that would be our cue to get long. Okay, not because we're hitting new highs. I've never once cared that a stock hit a new high. This was a new high. How'd that work out for you? This was a new high. How'd that work out for you? This was a new high. Okay. And when you look at our time frames, all these new highs probably didn't work out. Okay. So new highs by themselves, I kind of chalk it up to a big whopping who cares. What I want to see is that new high having taken place with some sort of a breakout of some kind, right? So think back to like when NVIDIA way back here. So, keep in mind this is post split, so the 500 level. Okay, that level had been tested any number of times, and that breakout is what triggered this whole thing. Okay, seems like we had a pretty good level established here, popped above it, right? So you just want to see a real breakout. Problem is, like everything with technical analysis these days, everybody just waters them down. You know, everything's a double top. Okay, even though we haven't even put in one top, double top. So you got to be careful, and that's kind of clowns like that give technical analysts a bad name, right? So, um, when you think of this particular conversation, new highs, and hitting a new high by itself. These were all new highs. I don't know if that means every day you want to buy, is it? I don't know if that means every day was a quote breakout. No, we broke out back here, right? So now we're just trending higher. There's no breakout. We're just trending higher, right? So there's a big, big difference. This we're breaking out. Okay, we're breaking something important. Okay, if we hit a new high, 15 out of 17 days, I call me crazy. New highs aren't important. We're doing it all the time, right? But back at something like this that we couldn't do, right? Remember, Broadcom was similar. A lot of stocks during that stretch, similar. Okay, obviously, all these guys having a split and such. My lines are gone. Kind of like right back here. If this thing ever, where did all my lines go? Somebody took all my lines. Kind of see, look at that. Maybe I've got the wrong stock. I thought it was Broadcom. Who was it that broke out with right around the same time? Well, anyway, you get the idea. So where were we? Meta. Take out 540. I'd be looking for some longs. End phase. That was another one we took a look at. Nice little 120, right? So hit it again on Thursday, pulled back. End phase takes out 120. I would think that's going to open the door to probably get back to this 140. Big breakout level here. I think it goes back further than what you see here. I remember. Yeah, it goes back to here. Right? So look at that. Okay. So if we ever got to 140 and kind of held above it, new 52-week high, breakout. Well, not because it hit a new 52-week high, right? This was a new 52-week high. So how'd that breakout work? Okay, we couldn't hold 140. Okay, that's the problem. That's the breakout point. So if we could hold above 140, the breakout isn't the new high. The breakout's the break of 140, something the stock has failed to do time and time and time again. All right, so we'll see if that unfolds. So throw these in your list to watch. These are just all great little setups. Same ones we're watching. Keeping it simple, right? Which, in today's day, it's crazy talk. Crazy talk. What do you mean? Where's your 87 indicators, sir? Yeah. Show me yours. Show me yours and how well that's working for you, right? So simple breakouts, simple breakdowns. Stand the test of time. What else? We haven't really looked. We looked at NVIDIA. Oh, I remember what we were looking at too. All right, so run them down here. We got Meta. We want to see take out 540. End phase. Want to see I'll take 120. PDD. We want to see take out 150. ExxonMobil. 120. Right, or a breakdown. Boeing. We saw Boeing take out. Yeah, it's kind of, I don't know, kind of like this move above. This is a price that has stood out over time. Okay, got a little murky in certain areas, but outside of that, kind of taking this out. So we actually decided to get a little long on this on Friday. So we'll see how that goes. It's up a little bit in the pre-market, but my guess is we're up a little bit, I guess. Nothing to get crazy about. Yeah, so we'll see. Who else we watch? And trying to remember everybody we looked at the end of last week. Keeping an eye on CRM. I think that was the one. Didn't quite get where we wanted it to go. Kind of looked like, okay, so here's your breakdown point. Okay, let's call it 267, right? 267. Look here, it's kind of like 266, and we kind of stalled here twice. So it's kind of a zone right in between 266, 267. It's where we thought it was going, and it may still, be getting there. But if you kind of can claw back up here, then we be thinking CRM could be worth a look. Something couple stocks we trade all the time. Tesla. Not sure what I would do with Tesla here, which is a good reason not to do anything. So we'll skip it. SMCI, our buddy. So you can kind of see stalling right at the top of the gap. Okay, so as you probably know, tops and bottoms of gaps can act as support and resistance, right? So right where we're stalling, if the stock can push into that, one would expect that you would close that window, which would take you up to the 660 mark right here. So not a lot of room to move between these. This was the big breakdown level, the big break, right? Couldn't break, couldn't break, couldn't break. Once it finally broke, that was kind of a cue of what was potentially coming on earnings. Right? So if the stock could take back 700, I think that would be a very, very positive sign. Otherwise, this is something I'd probably be watching for more of a bearish play. Um, but again, if it took out, you know, started to fill this, you can claw back above 660, depending on the day of the week. We do a lot of shorter term stuff. So here on a Monday, buying calls, buying puts, I don't know, a run to 660 to 700 would be something we'd be too interested in. But a little later in the week, when the premiums are lower, it actually would be, right? So First Solar, we don't do a whole lot. I took First Solar out of my list. I didn't like the way it looked, to be honest with you. By the way, if I type the symbols in the box, I'm gonna type them in the box. Everybody can tell me if these show up. I assume it does. These are the ones we've talked about that we think are worth watching. All right, does that show up? Everybody see that? Those four symbols. Yeah, I assume you all see it. I just want to make sure though. Yes, you do. Okay, cool. So yeah, so back to First Solar. Let's come back over here. I mean, I don't know. I mean, I could see if you look right through here, I could see a reason. Call it 233. Stock takes out 233, probably get to this 240. But you kind of see the same thing as it kind of broke rungs, kind of just told you what it was doing. So just kind of got a little messy here. So I took it out of the list. But I would say, again, take out 233 ish. Probably opens the door to at least 240, but I would think even higher. So I took it out just it just got kind of got sloppy and messy and just didn't really care about it. Doesn't mean it's bad or anything, obviously. Somebody's trading it, right? So, but okay. All right. So there's some of the ideas we're looking at. Market wise, again, overall thinking higher, but I just think we should be cautious for potential pullback. It's been a nice, 4% week last week. I think the best roadmap that we're going to watch is right here. Right. So let's pull this back up. So anybody that didn't see it before, okay, you can kind of see exactly resistance, right? Support there, then resistance. We fell underneath it, resistance again last week. So I think this is a pretty good map. When it broke above these trend lines, right, that gave us the cue. We were probably running back up here. We did. And so I'd be watching to see if we could take that out. And that would be probably what I would think might be the best signal to start looking to get long some other stuff and some things. All right. So we're open for business. And one last thing, I'll put the link in the chat box here for everyone. been talking about, I've mentioned it a few times, going to be discussing, there you go, shows up twice when I do that. Wednesday, we'll be doing a little call where once a month I come on out, talk a little bit about a very unique coaching program of mine, one that includes the education, the trades, the trade ideas, the coaching, the support, everything. And it's a one and done investment. So once you're in, you're in. So it's pretty unique. I'll be talking a little bit about that. Pretty casual, just me, and we'll go through some of the stuff like we have today. I like to kind of show what my philosophy of trading is, which is very much focus on the things that matter. 99% of what's being peddled to you on X or YouTube doesn't matter, and by that I mean everything is about indicators and trading strategies. They don't really matter um, any one person's way. What matters is the stuff that the boring stuff. So talk. I always like to talk a lot about that. Right? If you're you good position size, good risk reward, if you're disciplined, if you can control emotion, if you can do these things, and you remember that price is the only thing that ever paid you. Um, a Bollinger Band never paid you a cent. A moving average never put a dime in your account. VWAP never bought you one thing. Right? Price is what does it. If you get those things down, everything else becomes a moot point. Right? And that's why there's so many different things you can quote use. Right? So fill in the blank. Right? I mean, seems like every day there's a new one being added over here somewhere. Right? But there's a million. All of them work. All of them fail. Right? Because it really has nothing to do with any of this stuff. But that's what's peddled to us. The idea, oh, I have the right. So I'll talk a little bit about that, and just kind of you can see it for yourself right here in action. Right. Um, we posted this in our coaching program. Right? Broke this out. Hey, probably going higher. Ta-da! Wow, price is pretty effective. Right. Break this support. Probably going lower. Yeah. Wow. Price is pretty darn effective, but we're not taught to look at it anymore, right? Because we have all these wonderful trading platforms and software programs, all this cool junk, right? So we're not looking at the most important indicator in the history of indicators right here, right? So it's a pretty relaxed call. If you want to attend, there you go. A lot of gimmicks and I'm going to make you $1 million on this call type of shtick. I'm going to walk through a lot of this stuff and talk a little bit about the program, answer questions. Netflix, yeah, we'll look at Netflix before we go. But there's the link for it. It's Wednesday, 1 o'clock. Clawing. Speaking of clawing its way back, again, this is the same level we had back here from before. I don't know. There's a little bit of choppiness over here. I mean, I took this out of the list too. I just didn't like it as much as I used to. It's just kind of messy and all that for me. But I would think, if you kind of can get back up here and take this out again, especially if you can take out 700. But remember, here's a great little rule when it comes to any of these stocks. If you're not sure how to trade it, great reason not to trade it. Go find something that you can. That's one of the biggest handicaps for those that initially attempt to become acclimated to the way that me and others that kind of again keep it simple is, well, you got to go find the stocks to tell you what to do, right? When we talked about whatever, which pick one, end phase, right? I didn't blindly close my eyes, flip through a screener, and pull up end phase. Okay, it's something that I'm targeting and watching because it's telling me what to do. This is why I don't need VWAP, moving averages, volume profiles. This is why I don't need Bollinger Bands or Elliott wave counts. I found something that price tells me what to do, right? Hold above 120, opportunity to get long. Done. Right? So if you're ever pulling something up and you're not sure, great reason not to trade it. Right? So I want to make sure that anything that we kind of throw on the board, we look at it and we say, "Ooh, wow, this, looks interesting or whatnot." We were watching DFS as it was getting closer and closer to 120. Never broke it, but we had it because if we broke it, it would have told us what to do. Hey, you might want to buy some puts. Probably going to close this window down here. So that's part of it. You have to set yourself up for success. And don't look at it any different than if you were somebody that loved candlesticks, right? I love candlesticks. I've narrowed it down to only a handful that I really truly care about. But let's say you were somebody like I'm going to be the hammer time trader. Hammers. That's all I want is hammers. Well, Is every stock you pull up today going to have a hammer? Of course not. You would have to go and find the ones for it, right? That have a hammer so that you could trade it. It's no different here. If you want to trade important price levels, so forth and so on, if you want to simplify your trading, you do have to set yourself up that way. All right. Most of the traders that I work with or coach or teach that have been struggling that are not new, right? One of their problems, one of them is that information overload, paralysis by analysis, and they're trying to trade 17 different indicators. They're looking at all that stuff. Like, well, no wonder your trading's a disaster. Okay, one thing I can tell you is that whoever's approach you follow, they are succeeding partly because all the things I mentioned a little while ago, but they're also staying in their lane. Okay, somebody that's trading point and figure is trading point and figure, right? They're typically not out there point and figure, Bollinger Bands, Fibonacci retracements, doing LE wave counts, right? They're typically staying in their lane. In the public, we don't do that, right? We take on somebody's strategy, right? We don't have any of the things that I mentioned earlier that are the only things that really matter, right? So nobody ever blew up their account because of which indicator they use. Fact, okay? It's because I use the 10-day moving average. No, it's because you over traded and or put all your money into one trade, right? So if you have all that boring stuff down, that's why it doesn't matter which of these indicators you use. The problem is, as a retail trading product, we don't have those boring things down. So this guy's 3 indicator system didn't work. I'm going to go check this guy's, and I'm going to check this person's, and I'm going to go to this person, this. For next thing you know, well, don't you look at the 5-day and the 10-day and the 20-day and have the bands up and the Fibonacci, and aren't you doing the LA wave count? Where's your volume profiles? And what about the VWAP? Where'd you anchor it? I'm sorry, what? No one does that and succeeds, right? They stick to their lane, right? So if Bollinger Bands are their thing, that's generally, where they're going to hone in on. So whatever you choose to do, and there are a million different ways you could succeed in the market, okay? But you're not succeeding because of whatever you chose out of this drop-down menu. Never happened, never will. Okay, you're succeeding because you have all the boring stuff down. And then you'll find yourself doing what every other successful trader does, which is getting rid of all that other crap. You're going to narrow it down to 2 or 3 things that are your jam, right? My 2 or 3 things, big one here is the one thing that matters and beats every single indicator on planet Earth, which is price. There isn't one indicator out there that's going to beat price. Okay, ever. Okay, if there's some indicator out there saying bearish, but the price goes up, I'm going to lose. If the price goes down, I'm probably going to win. Not because of the indicator, because of what price did, right? Price is all this other stuff. These are just patterns, right? Just price patterns. So most of this is just price, right? It's just a trend line. It's just price. This is just a wedge. It's price. Rectangles are price. Head and shoulders, if we get one, it's price. Okay. I do love a momentum divergence. You'll see me highlight those a lot. Anytime there's like a divergence, I think those are pretty strong. Love a good hammer reversal, right? Look at this big reversal. We dipped a little bit in the following, but the low was in, right? So make it your own, but don't fall for the crap. All right. All righty. There you have it, folks. Hey, I'd love to see you on Wednesday. Talk about the coaching program. I'm not going to be there to sell you anything. Don't worry. Talk a little bit more like this. Keep it straight. I don't have any shticks. Sorry. I don't have any pictures of yachts or Ferraris. Sorry. But I will show you how, elaborate more on this, talk about this, and then show you how maybe my coaching program can help you. Right? I don't have sub coaches. I don't have assistants. You'll be working with me. So if you're interested, see you Wednesday at 1. Otherwise, no harm, no foul. If you're not, I will see you every Monday here on the Marketcast and trying to help you with your trades, right? So everybody have a great one. See you next week.